Good morning, it's Wednesday the 30th of August here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Bloomberg Economics says China's teetering property sector could be heading for a solvency crunch by the end of the year.
UK home sales remain on track to hit their lowest level in over a decade.
And a date for the diary. Apple reveals the timing of its biggest product launch this year.
Let's start with a roundup of our top stories.
China's property developers face a cash crunch that's so big it equates to 15% of the country's entire GDP. Bloomberg Economics is now warning the sector is both too big to fail and too big to save, with the possibility of a solvency crisis by the end of the year. The bleak assessment comes as China's largest banks prepare to cut interest rates on existing mortgages and deposits in a bid to shore up the sagging economy. Dwight Evans, head of Asia Pacific macro strategy at State Street Global Markets, says market participants are sceptical.
It's very clear that investors and investor sentiment on China remains quite negative still. So you've got two areas here. One, you've got the underwhelming data that we've had year to date. And secondly, this perception that the policy that we've seen to date has simply been not sufficient to actually drag the economy out of its slowdown.
Those comments from Dwight Evans on shaky investor confidence are underlined by the latest news from Country Garden. The embattled property developer says it's now aiming to issue more than $34 million worth of new shares as it tries to meet payment deadlines.
The US Commerce Secretary says that American businesses tell her that China is becoming increasingly uninvestable. Speaking during her visit to the country, Gina Raimondo pointed to challenges, including fines and ambiguity over China's new anti-espionage law. The former US ambassador to China, Max Baucus, doesn't agree.
I think and a lot of businesses know that if they're smart, if they maintain their business relationships in China, they could probably work out a deal. Now, it's true that it's the climate in China is makes it more difficult for U.S., but I would not say uninvestable. I would just say the risks are greater.
Max Baucus's comments come as the UK's Foreign Secretary, James Cleverly, heads to Beijing. Cleverly is the most senior British politician to visit in 6 years, and he now says he wants to reset ties between the two countries.
Sales of UK homes are expected to fall to their lowest level in a decade as higher mortgage rates weigh on buyers. Property website Zoopla sees a 20% drop in deals this year compared to 2022. Executive Director Richard Donnell says the market downturn is also hitting renters.
Higher mortgage rates are slowing transactions down in the sales market, but meaning people continue to rent, so it's adding to demand for rented housing. The other thing about higher mortgage rates is they're sort of incentivising more landlords to look to sell at the moment.
Donnell's forecast is based on the number of homes sold so far this year. He adds that a rise in home sales by rental landlords is helping first-time buyers.
Now in some market news, a rush of hedge funds shorting Treasury futures suggests more volatility could be ahead for the market. The funds are now short on over 6 million 10-year note futures, effectively a giant bet that yields will rise. The surge in derivative positions may exacerbate volatility in the market, as happened in previous cases when they were rapidly unwound.
Grayscale has won a key court battle in its push to launch a Bitcoin exchange-traded fund. The victory over the US Securities and Exchange Commission brings the crypto industry closer to tapping billions of dollars from everyday investors. Paul Grewal, Chief Legal Officer at Coinbase, says it's an important moment.
Courts once again are stepping in to provide regulatory clarity where the SEC has refused to do it. This was a unanimous opinion. It just shows again that the SEC, when it acts contrary to law, without regard for developing common rules and standards, is going to find itself held accountable in courts of law.
Paul Grewal and other crypto advocates believe an ETF based on spot Bitcoin prices would result in a gush of retail cash. Bloomberg Intelligence estimates the total market could be worth in the region of $150 billion.
And finally, Apple has set a date for its biggest product upgrade event of the year. That story from Bloomberg's Charlie Pellet.
The date is September 12th, and Apple will unveil the iPhone 15 line and next-generation smartwatches. The company announced the plans on its website and via email under the tagline Wanderlust. The presentation will be streamed online at 10 a.m. Pacific with an accompanying event at Apple's Steve Jobs Theater in Cupertino. Apple is under more pressure than usual with this iPhone launch. Its sales have slipped for 3 straight quarters as the company contends with shaky demand for smartphones and other devices. In New York, Charlie Pellet, Bloomberg Daybreak Europe.
Now, those are some of our top stories in the markets. I wonder whether you read this. A lot of people did. Have you got an expensive timepiece? Do you want something that rivals a yacht? There's an in-depth story all about Richard Mille and his watches. They only make a few thousand of them. Watch stories on the Bloomberg terminal always get so much interest, and this one's no different. Whole lifestyle.
Yeah, so I wasn't actually familiar with these, but essentially they're sort of inside-out watches. You can see the workings of them when you look at them, and they are really exquisite, actually. The detail of what you can see in terms of how they move. Of course, it's been used and worn by many celebrities, particularly in the sporting world, but also the likes of Pharrell Williams has worn them as well. The rarity value is what's really important here. Is there's so few of them, and in fact some of the models, there's one that was only 15 of them were made that has a flowering flower in it, a magnolia flower in fact, on the Tourbillon Fleur model. And they are incredible. However, as a counterpoint, I would say it can be quite difficult to tell the time looking at some of these timepieces.
I'm not sure whether that's why you buy them. Apparently they are dubbed the billionaire's handshake, and of course therefore Kendall Roy, if you're a Succession fan, wore one in one of the seasons, we're told. No, but it's a very nice piece about sort of extravagant wealth and the kind of lifestyle that goes with it, and the stories around watches are always of interest.
Indeed, we watch closely when we see those things. Let's turn to the latest news out of China next. New research from Bloomberg Economics shows that China's property developers face a wall of obligations that could morph into a solvency crisis by the end of the year. This, as the Chinese developer Country Garden, which is at risk of defaulting, is due to report earnings today. Joining us now for more is Bloomberg's Shanghai Bureau Chief Charlie Zhu. Charlie, great to have you with us. We're looking at this Bloomberg intelligence report. How big is the problem facing China's property developers?
Yeah, the latest data we got is China's developers have debt worth like nearly 14 trillion yuan, or 12%, or if I remember correctly, of the nation's GDP at risk of default. That's the latest data. And China's junk dollar bonds, which are issued mostly by developers, have lost an unprecedented $87 billion in trading over the past 2 years, so in a very short time frame. And Chinese local corporate bond defaults are running at the highest level since the beginning of the year. The stress, there's a big serious distress in the local bond market as well. So given the sheer size of the property debts and its importance to the economy, so if the bubble bursts, it will have a huge repercussion across the economy, as you can imagine.
Yeah, absolutely. The size and scale is enormous. But then why has the issue become so bad when it's been known about for years now?
So, over the past 2 decades, property has been regarded as a pillar economy for local governments across the country because of rapid urbanization, people moving in from countrysides. Local governments is also happy to see such a boom, as they can make tons of money from land sale, and also collected huge amounts of taxes from all kinds of property-related transactions. So the industry has been a money spinner for the state landlords for decades. On the other hand, for ordinary households, property has proven to be the best performing asset class, delivering a annual compound growth rate of more than 20% in some major cities like Shanghai. So people got crazy about property, and that pushed developers to borrow to build more and more houses. And then the bubble started to burst because of massive oversupply. Policymakers actually have realized the issue back a few years back. Remember Xi Jinping's slogan of housing is for living, not for speculation back in 2015. But obviously in the last few years, people continue to ignore the warning and continue to pile into the market. Now you're facing serious glut in the market, and developers have built way too many houses over the years. According to a Goldman Sachs report last month or earlier this month, it will take at least 5 years just to clear the inventory, and many of those inventory are half-completed projects.
Given the scale of the issue and the numbers highlighted in this report, are these developers too big to save?
Well, from the government point of view, the first one to do is they're trying to diffuse the risk, preventing it from setting off a domino effect across the industry and pull down the economy, right? So what you are seeing is they are working to ensure developers have enough funding to complete housing projects and deliver them to home buyers. Otherwise, there will be social unrest. You have seen the mortgage protest in China last year, right? And they're also lowering the policymakers are also lowering mortgage rates to drive demand from first-time home buyers and people who have the need to upgrade. So they don't want to stimulate speculative buying for sure. They want the real demand. The second priority is creditors, bondholders. From what we have seen, the strategy is to let developers renegotiate the payment terms, extending the payment deadlines, the grace period, so they don't have to declare default or got pushed into bankruptcy. So actually, bondholders are fully aware developers' cash flow these days are fully prioritized for project delivery instead of bond repayment. Nothing surprising. So on your question whether developers are too big to fail, to save, yes or not, what's clear is it probably does not, the policymakers, don't want the biggest ones to collapse because otherwise it will cause too much pain for the industry. But at the same time, it seems regulators will not want to bail them out. That will trigger something called moral hazard, right? So the deleveraging in the sector expected to continue.
Yeah, it's an extraordinary story. Charlie, thank you so much for joining us this morning. Bloomberg Shanghai Bureau Chief Charlie Zhu on the latest. Bloomberg Economics estimates that China's property developers face 18.9 trillion yuan in terms of that liquidity shortfall.
Up next, an investigation into Goldman's use of Chinese money to buy UK companies and Burger King's Whopper.
Now, the paper review on Bloomberg Daybreak Europe. The news you need to know from today's papers.
Bloomberg's James Walcott joins us now in studio for a look through the key business stories in the newspapers. Let's start with the Financial Times. An investigation into Goldman Sachs and its ties to China.
Yes, Caroline. So this is a fascinating story because on one hand, you'd argue like nothing is amiss here. So what is going on is back in 2017, Donald Trump visited China. Goldman announced it would set up a fund with the Chinese state to invest in companies in America and the West as a way of building ties between the two of them. And then they have done so. They have used roughly $2.5 billion in private equity in this partnership fund to invest in multiple companies, 7 of which over the past 3 years have been in the UK. End of story. However, when we are looking at big issues of Chinese influence, issues of how far these companies are subject to any kind of influence from their shareholders, how far this stuff is transparent and open in terms of private equity, the FT have done this big investigation, which chimes with James Cleverly being in China today for this big meeting, to say that you have quite serious companies. It includes Netitude, which says on its website it is an approved service provider for the UK government and helps, quote, strengthen government and defence organisations across the world by doing things such as ethical hacking, where it attempts to find vulnerabilities in state websites and then passes them on to the state. That is a company that is part owned by a fund that is part owned by the Chinese state. And that is what the FT have aimed to show. It is worth saying that the 7 companies, when contacted for comment, most of them did not respond to requests by the LRQA, which is part owned by Lloyd's. Goldman said in the statement, the Cooperation Fund is a US fund run by a US manager and is managed to be in compliance with all laws and regulations. And a British government official said it did not comment on specific acquisitions given the quasi-judicial nature of its investment screening powers. So on the face of it, this is just private equity working to help countries invest as it should, but it also raises some serious questions.
OK, really interesting story in the FT today. Let's go to the Wall Street Journal next, writing about German stagnation.
Yes, this is an interesting story. The Wall Street Journal have taken a very, very scathing edge to looking at Germany's economy. And it's quite interesting to sort of separate what is real and what is not here in terms of they point out that Germany will be the world's only major economy to contract in 2023, with even sanctioned Russia experiencing growth, according to the IMF. Now, this is fascinating because it does point out, as this Wall Street Journal article goes to, that Germany is uniquely export reliant. And with the recent China slowdown and also with the Ukraine war, Germany finds itself in a very difficult position. But it is worth adding in. I mean, look at a lot of Bloomberg's reporting on this. Just because the UK is set to grow by IMF forecast by 0.3% this year, if you then zoom that out to, say, 5 years, you could argue that some economies like Germany will be in a far better position than, say, the UK in a bit further, like a long time. You also point out the piece goes in depth into sort of Germany's automotive issues, but Tesla's Gigafactory recently set up in Germany, and Germany's had outstanding success in attracting foreign investment in the EV sphere. But it's worth pointing out that sort of the Wall Street Journal is bringing together a lot of negative business voices that are questioning some of the strategic decisions Germany has made.
Yeah, absolutely. You've seen business consumer confidence in Germany plunge. And watch out, of course, because we get the CPI data both overall for Germany today at 1 o'clock, but then also from North Rhine-Westphalia, which is, the big industrial heartland. So we'll be looking at that. Just lastly, squeeze in the story around Burger King facing legal action over the size of its Whoppers.
So a judge has ruled that the jurors must decide what is reasonable, Caroline. Is the burger 35% bigger on the menu size than it is in reality, as the lawyers suggest? Now, I will say very briefly, this lawyer in particular has filed more than 500 lawsuits about food not reflecting its label qualities between 2020 and 2023. But I will also say, here in the UK, Burger King lost a suit back in 2010, where it was found that its advertising on television didn't match up to the size of the burger.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.